So I'm always amazed by the different things that we've created within the world of life insurance and how it's been so beneficial to our clients. I want to share with you something that we call life expectancy insurance. This was something that was created over 25 years ago. And what I try to do differently than many insurance people is I look for aberrations in the marketplace. What does that mean? I am looking to see if there is any type of actuarial miscalculation in insurance companies' software that I'm able to find some nuance to make something very palatable. So let me bring you up to speed with this idea of life expectancy insurance. Understand that when we talk about buying life insurance, for whatever the reason is, and again, we've addressed this before, but it could be for estate planning, accommodating the ultimate estate taxes. It could be for leveraging your IRAs, your 401k plans, any retirement accounts 10 to 20 times. It could be utilized to offset any losses that you may have incurred in the stock market. It may be a way to just create a legacy, leave more money for your family. I'm so excited of all the different things we're going to share with you, but let me just come back to this life expectancy approach. So the idea is that we buy life insurance and we want to make sure it's there when we pass. Otherwise, there was no purpose to it. So therefore, we buy a policy, whether you're 60, 65, 70, 75, 80 years of age, but you want that policy to last forever. Now, many people that I meet with will say to me, Howard, we're paying for a policy that lasts forever, but I'm not lasting forever. Well, forever is defined within these insurance companies of 120 or 125 years of age. But someone says, I'm not living past 95. Oh, well, if that's the case, let me share with you how to buy the same amount of death benefit, the same life insurance, excuse me, but rather than structuring the policy to last through age 120 or 125, I can structure it to last through your age of 95. There are others that say, I don't think I'm living past 85. Well, I can structure that policy to last through age 85. Now, you would come back to me and say, well, what does that mean? If I only structure the policy to last through age 85, once I get to that point, am I done? Is there no more insurance? No. I want you to think of this just as your car. We happen to be in South Florida right now, and in Palm Beach County, if I want to drive from here to Orlando, I know I can get there on one tank of gas. If I want to drive to Georgia, I know my car is not going to make it on one tank of gas. So let me ask you this. After driving for 3 or 4 hours, by the time I get to Orlando, let's say, and I run out of gas, do I throw my car away? No. What do? I refuel it, and that allows me to go the next 300 or 400 miles. Ladies and gentlemen, it's no different with life insurance. You see, I can buy from inception a policy that will last through age 120 or 125, or I can buy a policy and pay a premium that lasts through your age of 85. Now, it's the identical policy that goes through 125. It's just that I am paying a lesser figure, a lesser premium. And by paying a lesser amount of money, the policy will only go so far. In this case, age 85. Now what happens? Well, just like with the car and having to fill it up with gas, I need to fill this life insurance policy up. And what is the fuel that is used to fill up the insurance policy? It's money. So all I do is increase the amount of money I pay into the policy starting at age 86, and I can structure that now to last till 90 or 93 or 95. And then I can also share with you what it will cost if I only go till 93, let's say, what it would cost at 94 to go through age 100. So this is when we get down to really customizing a program for someone and showing you the most cost-efficient way of purchasing that life insurance, before we get into any specific strategy, I want you to understand the way these policies work and the flexibility, the maneuverability that you have within these policies. And regardless of what structure we ever start with, we can always change it. So after a few years, if someone says, you know, my health has changed for the worse, I'm not living as long as I thought, well, guess what? We can reduce the premium because we may not need the duration to last as long. On the other hand, if you're feeling uncomfortable and you say, I want this policy to last a longer period of time than we initially set out, all I have to do is increase the money that goes into that policy. This, again, is what we call life expectancy insurance.